We'll be speaking about the DeFi lending and leveraged investing in crypto. And by DeFi, I mean decentralized finance, of course. We will be going through the agenda that will be covering topics like the DeFi itself, the pillars of DeFi, lending and borrowing, the blockchain. We'll cover some basics of the blockchain, and we'll finish off with the margin trading, and we'll also have a few words on the stable coins as well. So to start, need to put a little bit of a disclaimer here because we'll be going through some of the investment, maybe sliding a little bit through the financial advice, but that's why the disclaimer is here, that nothing in this presentation or my keynote shall be considered as a financial advice. So let's start with the decentralized finance and its key factors. Is anyone of you recognized with the decentralized finance? If you can just raise your hands up. Okay, we have a few people here, nice. Cool, so for the decentralized finance to actually fulfill its role, it needs to have three key factors included in itself. So it's the cryptography that Igor already have few words on. This is the for example, RSA, the cryptographic keys, private keys, public keys, coding, decrypting, encryption. So everything you know about coding when it comes to its security and the messages of the security. This is the cryptography. For the blockchain, we'll have one more slide right after this one. So we'll explain more about that. And the smart contracts, this is the third key factor that is a really important one for the decentralized finance to work effectively. And smart contracts are actually just a code of terms and conditions that is incorporated within the blockchain. So there doesn't have to be some parties, some persons that actually operate the code. Yeah, so this is the smart contract. So for the blockchain, how does it work? Does anyone of you how blockchain works? Hands? Okay, again, just a few people. It's good because this is a really simple, I hope that everybody can see that. This is a really simple explanation, an illustration of how blockchain actually works. So if you doing a transaction on the blockchain, you start with the transaction with the request of the transaction, and then the request is being authenticated on your computer. After that, a block representing the transaction is created. Then this block is sent to every node or the participant. You can consider node as a computer, yeah? And it is sent to every computer in the network. Those computers then validate the transaction, and the computers then receive a reward in terms of some proof of work. This is called mining, right? So if you have ever heard the term mining Bitcoin or the miners, this is what they're actually doing. They're validating the transactions through some specific mathematical functions and receiving rewards upon that. After that, the block is added to the existing blockchain. After that, the update is distributed across the whole network and the transaction is completed. So this is how blockchain works in really simple terms. For the next one, we have moving on to the DeFi. So how DeFi works. You probably know that there is a centralized finance or the traditional finance. Now we are approaching the times of the decentralized finance or the digital finance. So for the centralized finance, I think that the best thing how to explain how DeFi works is to compare it with the centralized or traditional finance that we are in right now. So for the centralized finance, you can see that you always have the sender and receiver, and between these two parties, there are another multiple more parties, like banks, like payment providers, another bank of the receiver. Yes, so it's like a complicated process that takes some time to be completed. It takes some time to even request for this process to start. It's costly, yeah, most of the time. So this is for the centralized, but when it comes to the decentralized finance, we only have two parties and blockchain between you. This means that it removes the need for other multiple parties that need to intrude to your transaction. So it becomes less costly and it becomes faster and it becomes more effective for you to actually complete some transactions or even like request some transactions. Then for the pillars of the DeFi, we have 5 pillars that are important for the DeFi, and even some of them are also being considered as main pillars in the traditional finance. So we have stablecoins, we have DEX. DEX is an abbreviation for decentralized exchanges. Then we have lending and borrowing, which is also one of the most important pillars in traditional finance, as well as the insurance. And lastly, we have margin trading. So we can start with we're going to cover 3 of them. We'll cover the stablecoins first. Do any one of you know stablecoins? If you can raise the hands, do you know USDT or any type? Okay. Few people. So stablecoins are actually digital currencies that are most of the time pegged to the stable asset, like a fiat currency, for example, US dollar or euro, or it can also be a commodity like oil or gold. Stablecoins are usually utilized in decentralized finance when the traders and investors want to trade on the decentralized exchanges that are ran by the code, by the smart contract. Yeah, so we discussed what is decentralized exchange. It's actually an exchange like the traditional exchange, for example, New York Stock Exchange or NASDAQ. But when it comes to the decentralized exchange, it's only ran by the smart contract or by the code. There is no other party that is actually overseeing all the transactions. It's only the code. So for the decentralized exchange to work properly, or for the traders to actually trade on decentralized exchange, they need to have some stable assets, and usually these assets need to be transferable on the blockchain. So those are the stable coins that are used on the trading on the decentralized exchanges. So they can provide you with the lower fees, they can provide you with the less volatility, actually no volatility because it's packed to the stable assets. They provide faster transaction, and they provide security. They shall provide a security, although there is a question mark, and the question mark is there because some of the stable coins like USD Tether, that is the most traded or used stable coin, still do not disclose its reserves, right? So we still don't know if for each issued USDT there is the same amount of US dollars. Yeah, so we still don't know if they are backing it up 100% or only 50%. They still have not disclosed this, but other stablecoins like USDC and for example some others, they did. So that's why the security can be also questionable, even though that it's being considered as stable. The next one, we have the lending and borrowing. I'm going to cover some interesting stuff here, how you can actually leverage your finances through lending and borrowing. So this is just a simple illustration of how lending and borrowing works in a crypto space. It's the same as like if you would be requesting for some mortgage or for some car loan or whatever. So the same process, you're depositing the crypto to the liquidity pool, then in return the lender will borrow you or lend you the money, and then you have to pay the interest upon your loan. Simple as that. But there is more. There are benefits of lending and borrowing in the DeFi. And the first is that there is no maturity of repayment. Yeah, there is no agreement where you need to repay all your loan. Then it provides you with the leveraged lending, which comes with over collateralization. So what is over collateralization? You know that in traditional finance you usually have to put up 20% of the value of the loan to get it. But here you actually need to over collateralize on your loan, which means that here you need to put out 120% of the loan value to actually get the loan. Now you might be asking that, what is the benefit for the borrower if I already have the money, so I don't need to lend it? The benefit is that if you own some crypto assets like Bitcoin or Ethereum that can actually rise in value in the future, you can use this asset as a collateral. You can send or put this asset in a liquidity pool for the lender. Let's put it in an example. For example, you want to borrow 100,000 USDT. So then you have to put up 100,000 and 120,000 worth of Bitcoins to the liquidity pool. And now you have 100 USDT, which you can use for starting a business. Yeah, you can take this 100,000 USDT to some centralized exchange it for the fiat currency like US dollar, and now you have US dollars, and you can start a business. You can open some restaurant or whatever, while you still have this 120,000 worth of Bitcoins in the liquidity pool that are still pertaining to you, right? So if you decide to return the money back, you return the 100,000 USDT back to the lender after, let's say, 2 or 3 years, whatever. There is no maturity of repayment. You return it back, and you found out that after the 3 or 4 years, the Bitcoin rose in value, let's say 200%, for example. So now you have 200% more in Bitcoins, you have the business, and you can again lend more money to start more businesses, right? So this is the leveraged lending and over collateralization in together. Then there are also flash loans, which is also an important asset or strategy how to utilize the lending or borrowing in a DeFi. Flash loans works in this way. For example, if you want to take a loan, you borrow money from the smart contract without the collateral. Here, there is no need for the collateral. Then you need to take an action. You will utilize the loan in terms of quick investment opportunity. This loan needs to be taken and returned back in the matter of few seconds. Yeah, this is done through some algorithmic codes, algorithmic trading. Many algorithmic traders or bots are using flash loans to leverage their assets, so they can actually trade it on some other exchanges, benefit from price fluctuations, from the volatility on other exchanges, and then they are able to return it back in the matter of seconds. Yeah. So final step is to return the loan, pay the loan back, and retain the proceeds that you possibly earned on the exchanges. And to finish it off, we have the margin trading. Margin trading can provide you with instant credit access, leverage flexibility, and most importantly, choice of multiple assets for the collateral. This is basically the same thing like I was explaining when it comes to the leveraged lending, like you're able to put up a Bitcoin as a collateral while you are borrowing money in USDT. Here it's the same thing. So for example, let's say that you open an account at a crypto exchange, you have some Bitcoins and you want to trade on margin. So you use Bitcoin as a collateral. So while you are gaining on the valuations of the Bitcoin, then and also you are gaining on your trading experience. And you can trade actually whatever you want. Yeah, you can use Bitcoin as a collateral, while you can trade, for example, gold to USDT. And speaking of gold, we can also, as a BITmarkets, provide you to trade not only cryptocurrencies, but also gold that is pegged to the USDT. So you can actually buy gold through USDT, through the digital currency. And that could be potentially a good investment nowadays because of many banks are, defaulting right now. It's becoming a trend that banks are not being able to hold on to the raising interest rates and stuff. So again, central banks need to print more money, which means that the gold and also the cryptocurrencies will be rising in value. So those can be the benefits from the spot and margin valuations.
Peter, so please, could you help me to answer the question, why and how do we differ from others?
Yep, definitely. It was a good question actually, but I'm seeing it this way, like why we do these seminars is not really point out the differences between the competitors, because we can see that many people here, that's why we are asking to raise the hands and how many people are having their accounts open, right? So we can see that just a few of them. We want to more focus on the people that still do not have their accounts open and actually introduce them to the crypto space, to the world of the cryptocurrencies. But anyway, it was a good question, which could be definitely discussed even like person to person. But when it comes to the differences themselves, BITmarkets is a crypto exchange like no other. You can deposit fiat, you can convert to crypto, you can withdraw crypto. You can do the opposite. You can deposit crypto, convert to fiat, you can withdraw fiat. Yeah, it's a crypto exchange. But now if you want to differentiate and if you want to provide more benefits, like for example more than Binance or any other crypto exchange, then we cannot aim for these conversions, simple conversions, but we need to aim for the trading, right? We need to aim for how to simplify, how to put more benefits and features on the trading platforms for the professionals and for the professional traders to actually benefit from. Speaking of few, we have, for example, instant deposit to our margin account, which is a derivatives account. We are basically skipping the need from transferring from the spot wallet to margin wallet. Yeah, if you already have, some of you open an account on a crypto exchange, you know what I'm talking about. We have this instant deposit to margin, which actually can cover you when it comes to the margin call, right? So if you are in a margin call, you can deposit directly to your margin account and have your margin account recovered. Another benefit when it comes to the trading is, for example, we do provide zero margin requirement for 100% hedging, 100% of hedging assets. Let's put it in a simple terms. If you are longing or buying one Bitcoin while you are shorting or selling one Bitcoin at the same time, there is no margin requirement. Your margin requirement is zero. Yeah. So this is the benefits and how we differentiate from Binance or from other reputable exchanges, because this is something that I till now do not know of any other crypto exchange that provides such services. So this is what I'm talking about. If we want to differentiate, we need to aim for the trading services and how to improve them, not for the simple conversions, because it's just a conversion. You don't have to do nothing there. Yeah, you just need to scale up the trading part and leave the spot transaction as it is, bring more and more currencies to be tradable or exchangeable, and you have the BITmarkets, right? So I hope I answered your question.
Thank you. Thank you, Peter. Anyone else? Okay. So,
by the way,
yeah.
I really like the contrary opinion of the lady here when you asked the question about whether it's good if the cryptocurrencies or crypto exchanges or crypto markets are getting regulated. The lady answered no. Also, there was a question that about the e-money, right? You were asking. So the lady was also not rooting for the e-money, like no, no, no. I really like the contrary opinions because we can, you know, we can build up more conversation, more discussions upon that. And basically, I think that why you are saying no to the regulation or no to the e-money is because of the fear of being controlled, probably, of having your money being overseen by the banks or by the government, right? But it's not gonna be 100% like this. I think that there's going to be choice where you will have options to decide if you want to use it, if you don't want to use it, right? There will still remain the fiat currencies. It will never be 100% crypto. It will never be 100% digital. There will still remain the, fiat currencies in the circulating supply in the economy. And when it comes to the regulation, for us, we can also say that we don't want to be regulated because for us as a crypto exchange, it means less reporting activities, less control by the authorities. But even though that we are like willing to accept these mandatory stuff and activities that we need to comply with, we are happy to accept the regulation because we see a potential in bringing more audience and more trust to the market as a whole, so the people can, you know, start looking to it as a not risky, as not scam, but as something that will have a really huge meaning in the future.